Welcome to Simple Investing Secrets. In today's video, we'll review 8 undervalued growth stocks to buy and hold. So before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. The search for undervalued growth stocks is on, with the stock market seeing a nice upside so far to kick off 2023. While not much in terms of the macroeconomic environment has changed, there are reasons for improved optimism among investors. The declines seen in many sectors last year could pave the way for outsized gains over the medium to long term. That is for investors who decide that the bottom is near for companies with multiples that have contracted significantly. The list of growth stocks that have seen their valuations dip into value territory is relatively long. There are plenty of tech companies now trading in what I would view as distressed territory. However, outside of tech, there are plenty of other growth at a reasonable price options worth considering as well. Interest rates will likely continue to rise from here. No one really knows how long the Federal Reserve will keep rates at these elevated levels either. But for long-term investors seeking decent returns over a 5 or 10-year time horizon, now may be a great time to start considering beaten-down stocks. Here are 8 such growth stocks that we think are worth diving into right now. Number 8. Pfizer, ticker, PFE. The company's stock price range as of April 2023 is $41. Pfizer was a top pandemic stock for obvious reasons. Its blockbuster COVID vaccine helped it post a 95% bump in sales from 2020 to 2021 to a whopping $81.3 billion. However, its cash cow is fading fast, with more than 72% of the global population receiving a COVID vaccine. As you'd imagine, Pfizer's COVID vaccine effectively allowed the firm to build a colossal cash war chest. The $22.7 billion in its cash till has helped the firm acquire several biotech startups, including Biohaven Pharmaceutical, ReViral, and others. Additionally, its likely acquisition of cancer drug maker Seagen could result in millions in new revenue for Pfizer. Its management guides for non-COVID revenues of up to $1 billion by the end of the current decade, indicating an impressive CAGR of 7% from fiscal 2019 through 2030. Number 7. Tesla, ticker, TSLA. The company's stock price range as of April 2023 is $185. Valuation has always been a key talking point with Tesla stock. Even its founder and CEO, Elon Musk, has talked about the stock being too high over the years. However, with the stock market rout last year, TSLA stock has shed a ton of value and now trades more than 50% lower than its 52-week highs. Moreover, it's currently trading at a hefty discount across all core pricing metrics. While TSLA stock continues to trade in the red, it's killing it with its quarterlies. It recently posted record fourth quarter sales of $24.3 billion, a 37.2% improvement from the same period last year. Musk downplayed concerns over a potential deceleration in demand, stating that the recently introduced price cuts have led to a substantial increase in volume. With Tesla's new vehicles hitting the market and its recent price slash, expect the stock to snap back in the upcoming months. Number 6. Meta Platforms, ticker, META. The company's stock price range as of April 2023 is $200. The largest social media company in the world, Meta Platforms, has seen its reputation shift over the past year. Headed by CEO Mark Zuckerberg, this company has promised a big turn toward the metaverse. What this has meant in terms of Meta's strategic focus and significant financial investment is noteworthy. Indeed, in recent quarters, Meta's Reality Labs division has been losing billions of dollars. Accordingly, many investors may simply want to steer clear of Meta stock. Other worries about Apple's iOS data sharing policies haven't helped, and this puts the company's plans for making money in danger. That said, the recent impressive decline seen in Meta stock provides investors with a great opportunity to pick up one of the best growth stocks at an incredible valuation. Currently, Meta stock trades at around 13 times trailing earnings. For a growth stock that has shown consistent bottom-line growth in recent years, this is an incredible valuation worth considering. Although headwinds do remain, we think now is the time to start considering backing up the truck on Meta stock here. Number 5. Cognizant Technology, ticker, CTSH. The company's stock price range as of April 2023 is $62. Based in New Jersey, Cognizant Technology operates as a top IT services and consulting business. With a market capitalization of $31.02 billion, Cognizant has established its leadership position across multiple niches in the professional services sector. Over the years, it has grown its top line by double-digit margins profitably. In the past few years, its sales growth has slowed down compared to its track record in the past. For instance, its 3-year revenue growth was 4.6% lower than its 10-year growth. Much is due to losing out on big deals to its top competitor, Infosys. Cognizant recently appointed a new CEO, Ravi Kumar, who is looking to correct the wrongs of the management's past in winning large deals. In the firm's most recent quarter, it acquired Austin CSI and Utegration and announced the acquisition of Mobica and OneSource Virtual. The level of aggressiveness in its merger and acquisition activity should bear fruit in gaining market share back from Infosys. Number 4. Advanced Micro Devices, ticker, AMD. The company's stock price range as of April 2023 is $92. Along with numerous other growth stocks, Advanced Micro Devices was hit hard in 2022 by reduced spending on technology and rises in inflation. However, the dismal year hasn't hampered its stellar long-term prospects. Even with last year's sell-off, AMD's shares have increased 493% over the previous 5 years and almost 3,000% in the last decade. The semiconductor company's sales have grown by 153% since 2018 and will reach $16.4 billion in 2022, while its operating income has grown by 1,000% to $2.6 billion. As a result, now is an excellent time to invest in this undervalued growth stock, with its price still down 36% year over year. Even though AMD's PC-focused client segment lost money in the third quarter of 2022, its data centers segment did not disappoint. The company's data center business saw revenue increase 45% year over year to $1.6 billion, with operating income rising 64% to $505 million. And the company has plans to expand further in this booming market. In November, AMD launched a new generation of data center chips named Genoa and plans to release a more powerful version called Genoa X later this year. Companies like Alphabet's Google, Microsoft's Azure, and Oracle are already using AMD's services, so the company is in a good position to keep making money as the market grows. The company's forward price-to-earnings ratio of 20.7 is especially attractive considering its prospects. The same metric for its biggest competitor Nvidia is 57.6. The stock of Advanced Micro Devices took a beating in 2022, but given how well it has done over the long term, it is unlikely to stay down forever. The company's shares have risen 16% since January 1, 2023 as investors reevaluate AMD's potential. As a result, now could be the perfect time to invest in this exceptional growth stock. Number 3. Apple, ticker, AAPL. The company's stock price range as of April 2023 is $164. Apple is a solid growth stock in all aspects. Over the last 5 years, the company's shares have soared by 211% and by 664% in the last decade. Revenue has risen by 48% since 2018 to $394.3 billion in 2022 and operating income has increased by over 80% to $119.4 billion in the same period. That is mostly because its products are in high demand and because it is good at getting into new markets. Counterpoint Research says that when Apple's iPhone reaches 50% of the smartphone market in 2022, it will officially pass Alphabet's Android. This is especially good because of the company's walled garden of products. When people buy one thing from the company, it often makes them want to try out more of its devices and services. And 2023 holds a lot of promise for the tech giant. In the first 20 days of the year, Apple announced more powerful chips for MacBook Pros, a stronger Mac Mini, and a new HomePod. Reports say that the company will soon start selling a new headset for augmented and virtual reality. It is also working to make its iPhones less reliant on parts made by other companies by making more of them itself. Each of these things has the potential to bring in a lot more money in the long run, which makes Apple stock a great buy in 2023. Number 2. Alibaba, ticker, BABA. The company's stock price range as of April 2023 is $102. Alibaba Group is one of the world's leading e-commerce and cloud service providers. The upward trajectory in these markets should set up Alibaba for tremendous growth over the long term. However, the company does most of its business in China, which has faced unprecedented economic headwinds lately. The stock is trading about 65% below its all-time high because people aren't spending as much money as they used to. There are still problems with the pandemic and inflation, and there are regulatory clouds over big tech platforms. At these lows, investors can buy one of the top tech companies in the world for an incredible bargain of 14.5 times 2023 earnings estimates. When the company was growing faster before the pandemic, the stock traded at a valuation of over 30 times earnings. Over the last few quarters, revenue has started to stabilize. In the third quarter of 2022, Alibaba's revenue went up by 3%, which was better than the 1% drop in the previous quarter. Another good thing for the company is that regulators seem to be paying less attention to it now that Alibaba has signed a cooperation agreement with the government of Hangzhou. With growth improving and the uncertainty of regulation starting to clear a bit, the stock has shot up 28% since the start of 2023, but it's still a bargain. China's economy won't stay down forever. Consumer spending will pick up eventually, which should drive faster growth for Alibaba. The upside from these lows should lay the foundation for above-average returns for years. Number 1. Diamondback Energy, ticker, FANG. The company's stock price range as of April 2023 is $141. Texas-based Diamondback Energy is an active oil and natural gas business operating in the energy-rich Permian Basin. Robust fossil fuel prices last year led to Diamondback generating record margins. The company generated 48.3% net income margins in the past year, more than 250% higher than the sector median. Consequently, it repurchased over $1 billion of its stock last year, in addition to its hefty dividend payout. Dividend growth over a 12-month period is at 480%, more than 150% higher than the 5-year average. It set a new target to effectively return 75% of excess cash to its stockholders through the base, variable dividends, and stock buybacks. Having said that, FANG stock trades at just 2.8 times forward sales estimates, roughly 19% lower than its 5-year average. This concludes our list of 8 undervalued growth stocks to buy and hold right now. As always, it is essential to do your due diligence before committing your hard-earned cash to buying stocks or investing in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.